Can y'all hear me? Can you hear me?
Yes, I can hear you. Can you hear me?
Yes.
Fuck, yes, we are up and running finally. Fuck,
Nice.
man, that was, oh, it's ridiculous.
Good
Too much
stuff.
back and forth. It is, man. And I feel hella bad, honestly, bro.
That's all right, man. Let's see. You were okay. We have more people joining. Nice.
Yeah, that's good. Right on. I appreciate them waiting.
No problem. Did you check out what I went over while we were waiting?
Honestly, bro, I have not even really been able to look at my phone, bro. I've been just go, go, go since I got out of work. I wasn't even able to cash my check. I wasn't able to do nothing except freaking purchase the truck, and that's it. I freaking legitly drove like two hours to go get this truck and then 2 hours back.
Yeah, I feel you. But yeah, at least you got that taken care of. That's good.
Heck yeah, man. It feels good to be able to actually, get that. Um, let's see if I can go ahead and start sharing my screen.
Am I in the Bay too? No, I am in Texas.
Hey, bro, if you can make me presenter so that way I can share my screen.
Let's see. Make presenter. Got you.
Yeah. Right. Thank you, thank
Okay.
you. Can you see my screen?
Um. Here we go.
Should be
Yes.
AJ.
Yeah, I can see it now.
Perfect. AJ on power. Nice.
Hold on.
Let's just
Let me see if I can show you my screen because you're going to be like, what the hell? Let's see. Where is it? How do, boy, I've got a lot to learn. I got to learn how to use this. How do I show you my screen?
Oh, yeah, you've got to be presenter to be able to share your screen.
Okay.
So here, I'll give it right back. No,
Okay.
I'll give it back to you, Brian. I'm just waiting to see if anybody else joins. If not, I'm just going to start, and this can be recorded. It's no big deal. It's late around the world, and who knows time zones. For me, it's only 9 o'clock, so it's still freaking early over here.
Yeah, it's relatively early. Hold on.
Yeah,
I'm gonna
it's
ask them to
Friday.
join.
Yeah, ask them, if not, I understand. No biggie. There's plenty more to come. This is just touching the bases, preparing for next week. It's a lot of people, they wait until Saturday or Sunday before the market to freaking mark up their charts. Why not get it done before?
Right?
Get it out the way. Already have a game plan. You know what I
Let's
mean?
see. Okay. Can you see my screen or no?
No, you should. No, you're. Hold on.
Uh,
There we go.
oh, okay, cool.
Yep.
Okay, this is what I was showing them earlier. This is basically how I chart. It looks, it's not as complicated as it looks, but this doodle that was made right here, this was made when the price was still here. Like, and I showed that on the Telegram that this doodle that crap, can't believe I did that. This doodle that I made was done when we
Mm-hmm.
were here, like at this point right here. And I showed them how I drew that and used that to kind of help predict what direction and what plays to make based on what my doodle looked like with price action versus what it came out to be live. This is basically what I use to memorize what to do and place trades on.
Wow. Honestly, I've never seen nothing like that.
I mean, it, I'm not like a wizard or nothing, but you kind of see how it still tends to follow the general direction and what's going to happen. It's
Yeah,
basically
overall.
it looks like I drew my own indicator. But if you
You're
if you go
average.
back if you go back in the Telegram, I showed what the before looked like.
I have to check that out, bro.
Okay, we have 2 people that have hopped on.
Hey, that's fine. If there are only 2, I'm fine with that. I'll give it a few
Let's
more
see.
minutes.
Drop the link. Our link?
Yeah, you should go to
I will take a picture of
trying to
that. Oh, of course, I can't do that because my phone's battery is low. Oh, I can send the one that I sent you. Okay. Hold up.
yeah, they're gonna need the 9-digit code to be able to get in.
I gave them the 9-digit code already, and then I showed them the link so they can just enter that into their browser and then enter in the 9-digit code.
Yeah, if you copy that URL that you have right up there, that's the direct link right there.
We have another person that just hopped on.
Right on. So yeah, they can get the link. Cool.
You think I
Go
ought to
ahead and.
close? What's up?
No, I was just gonna say,
Do you want me to go ahead and switch over?
yeah, if you want to, that's fine. As they come in, go ahead and mark down pairs that you want to go over that you want to chart.
You know the only pair I go over is gold, right?
Hey, that thing pays.
It does. That's why I do it. We'll go
It really
ahead.
does.
We'll go ahead and make you presenter because I kind of want to see what magic you have in store.
Again, it's nothing special, but it for surely works. Yeah, for sure. Did you make me presenter?
Yeah.
Nah, you made
Oh, crap.
Chantel.
Whoops. Sorry. Admin banhammer time. We're going to try this again. Crap. Okay, there we go.
Right on, right on. All right, so yeah, I'm just gonna go ahead and get started. So pretty much this one, I'm just gonna go over support and resistance and how I chart my support and resistance and what I look for when dropping my horizontal lines and the few times that I do use trend lines.
Mm-hmm.
Whenever I start, I always start on the daily. And pretty much all I'm looking for is where I start at the highest peak, where price turned around, so I would just come in and drop a horizontal line. Let's make it something else besides lime green. So yeah, just come in, drop a horizontal line right at the top, whatever the highest point is. And then the second horizontal line is wherever price ended, the lowest point. And after that, again, it's just you're looking for multiple points of contact where price has turned around. Right here, multiple point of contact. You see price came right up, wicked, came up, wicked again, formed the hammer, and then turned around and reversed. That's clearly resistance. Look
Mm-hmm.
again on this right here. It stood resistance, resistance. Overall, this was a respected resistance level.
Yeah.
Come
And,
down,
I
find
mean,
support.
you could have entered in at any time in that bar because it was clearly a reversal no matter what.
Exactly, no matter what, that's where price action, you know what I mean, ties into everything. Like, once you understand how these candlesticks form, this shit becomes easy. It's like clockwork. Like, you'd legitly have, if you were watching this right here form,
Mm-hmm.
price come up, and you knew that this was resistance. Okay, well, price, I'm already thinking price is going to have a hard time breaking this level.
Mm-hmm.
So when it forms a hammer, that's a dead giveaway. All right, well, what's the next thing that we're looking for? The bears to step in. And what happened? The bears had full control.
Yeah.
Your sell entry was the break below that candle close. The minute that happened, goodbye. You were good. You were good.
And in order
and again,
to...
you just...
Oh, sorry, go ahead.
No, go on.
What I was going to say was, in case by some miracle of economics that point of resistance was broken, you would basically be safe with going in with the sell at any time during that candle, but you could simply put a buy stop above that within a reasonable range, like maybe 20 pips or so, because 20 pips up and it's going to already head towards the next point. Do you see what I mean?
Yep.
That's basically how
Yeah,
I trade zones. So
gotcha.
if it's near that point of resistance, I usually go ahead and stick a buy stop like within range on top of it, so that way if some miracle of God decides to break that for any reason, you catch it immediately. You know what I mean? But you're doing that without the risk of getting wicked as well.
Yeah, and that's where a lot of people get in, trouble. When you start seeing price rise, like legitimately, it was a buy signal. Boom, the bulls had control.
Mm-hmm.
When you see rise, you need to think opposite of what you're seeing.
Exactly.
Nine times out of 10, when you see, price rising, well, what's the reflex? Oh, I'm missing out. I need to get in. It causes that urgency. That's you don't need to have that urgency. Oh, fucking AJ's going long. I need to get in. Price is rising. Price is rising. No, because you're gonna get in at the worst possible point, to where even when price pulls back, now you're sitting negative. Now you've got that drawdown. Now, can you stomach it? That's where the whole psychological part starts to kick in. When you see price rising, you need to think short. You need to be looking for short entries.
Exactly.
Same thing. You see price dropping like this daily, like this is 1, 2, 3, 4, 5, 6, 7 days of drop, followed by a basic, again, reversal hammer, spinning top doji pulling upward, and then you've got a freaking, I guess you can say like the engulfing, but it really didn't open up where the last candle did, and bulls had control. You were good for a buy. This is ideally where you're going to want to get in, at the key reversal points, because then you're eliminating the whole stress factor. You're going to catch the full ride.
And see, that's the
price is
issue.
Going to revert.
One issue that a lot of newer traders have is they don't tend to look at the daily, or they're not really understanding what they're looking at. So they'll watch something like the 5-minute or the 15-minute, and they will fail to see these same similar patterns form as they would on the daily. But it's actually even easier to catch.
Yeah.
Because if you're
and so here goes a nugget. Like, no, go ahead.
Oh, if you're ever late, guys, like if you see something just rise out of your control, it's honestly worth just waiting. It's not worth hopping in, because just as everything comes up, it's got to come down eventually. So if you guys think you're late to the party, then you usually are. It's usually not worth getting in. The ones who get in late and chase a trade and it happens to go up or it happens to go down when they get in, y'all cats are just lucky. That's what that is. That's luck. Maybe.
Yep, that's exactly what that is.
Yeah, it's
eventually luck will run out. You can't go 58-0. I'm sorry, you're gonna have some losses in there. To tie back into support and resistance, it's multiple points of contact. Like, I can't stress that enough. Wherever you see multiple points of contact, how far do I go back? I normally try to go back at least on the daily as far as possible. I want to know all the strong points. So I keep legitly going, marking multiple points of contact. But for this video purpose, I'm just going to leave it for this. I don't want to go too much into it and just keep going. But I start on the daily, and then I work my way down. So then the next one would be the 4-hour. same thing applies. You bring your chart to the closest point. All right, where is the highest reversal point where price has turned around? Right here. So multiple points of contact. Look at that. 1, 2, 3. Look at all these wicks. When you see this, this is a dead giveaway. Price is going to drop. Like, I guarantee you, when you start seeing wicks to the top, they are trapping the longs, trapping longs, trapping longs. And look what it made. It made a basic M reversal pattern. But you knew not to really trade in this zone. Why? It's just going to be ranging.
Exactly.
Your breakout.
And see, this
You've
is
got to
why.
wait. You've got to be that sniper. You legitly, again, like I make the same references because that's how I always think of it. Like, you've got to be that sniper that's in the military that's not going to give up their location. Their job is to shoot one bullet and hit their target.
Exactly. And one reason why you would not want to get stuck in this range is you have to always look at the finer points to see the exact support and resistance, because if you don't, you're going to be stuck bouncing up and down in a range, and you're going to be very, very emotional. And this is where a lot of traders make stupid mistakes. They will have a buy and it'll go down and they'll close. They'll have a sell, it'll go up and then they'll close. When in all reality, it's just a little bit of a bounce and then down. That's one of the biggest mistakes I see all the time whenever you're in a narrow range.
Yeah, most definitely. You've got to learn when to get in the market and when not to, because making pips is very easy to do. Anybody can do it. You know, there should really be no homeless people if you think about it, because making pips is really easy. But it's keeping the profits. How do you keep the profits? You take smarter trades. You take high probability trades. A lot of people are gambling. They're always rolling the dice. You're going to get lucky. You know, again, your ideal, if you look on the 4 hour, like
melted mozzarella and a
garlic parmesan. Yeah,
Hey.
let me get some of that, bro.
I don't know, man. Sure.
But yeah, you know, I don't know if anybody got any questions so far. There's been some people that's just kind of started tuning in, so I don't want to
Oh,
get.
actually, let's look at what's about to happen with this JPY pair. Like, it's clearly breaking through it's
All right,
clearly
so I'll just
breaking through a
continue.
floor.
I'll continue just, you know, marking my support and resistance. Again, I'm not gonna go like deep down in the charts because I want to kind of do it fast. But
Okay.
again, it's multiple points of contact. We're still going to be able to know what market is going to do. Why? Because we are focusing on where the market is most currently at, which
Yeah.
is this price point right here. You know what I mean?
Yeah.
Look at that. Look at that. It's beautiful.
There's also
And
one
it's
thing.
from the day.
There's also one thing I wanted to point out that a lot of people tend to forget as well. Usually the larger a price range, the less it likes to stay in it. I don't know if anyone's ever noticed that. Like, for instance, you see how this giant drop is right here. Do you see how since the price range that was drawn is clearly large? The minute it makes a significant movement, it's going to hurry down into these zones that break fast and then consolidate. This is one thing that I see on gold that a lot of people really don't understand. They will see something climb up, but then they won't understand where the exact zone and where the exact range is. So like a sudden up spike from a long downturn or a sudden down spike from like a bear run completely throws them off. And then they think that it's time for a buy and it still goes down more. And then they get into the ranging zones and then they lose more money from the bounces up and down.
Yeah. That's it, buddy.
In all
Keep
reality,
going.
we're looking at like the 4-hour chart and everything, but the 1-minute chart actually works just like this.
Does it really?
Yeah, believe it or not, it does. It's the same thing, but on a finer scale. Like, I know a bunch of traders are not very comfortable with holding trades long. A lot of them want, a lot of people like their money quick and easy. And the same concept that you're showing here is the same thing we do to catch those rockets on the minute chart. It's literally the same exact thing, only the time frame is shorter.
Yeah, that's pretty much the only difference. I solely long-term trade really. Again, you know, if you've seen that call on gold, that was 12-13-38. The minute it broke that zone, that thing took off.
Yep.
It skyrocketed. No, it was not because NFP. Like I could assure you, like that was not the reason.
NFP was only an excuse to push it up.
That's it. That's all it solely was.
Yep.
If you have any questions, you know, unmute yourself, talk. Come on.
Yeah, you guys can talk as well.
Yeah. Questions?
We set the trap and we wait.
Nothing.
Tim, I know your mic is on, and I know you always ask questions, so you can ask questions, bro. I see
Yeah,
you.
somebody asked something. Again, this is, I'm not, whatever questions you guys got.
Tim, you need to stop talking on your potato. Oh, okay. He wants to type a question.
Can't talk in bed with the wife. It's all good. I will type a question though. Most definitely. Any pairs you guys want to look at?
We had some folks. We had some folks that wanted to look at like GU.
Okay. GU.
Also, a good one to look at would be EU, especially with everything going on with Brexit and everything. That's a great one to look at.
With who?
With Brexit.
With what?
With Brexit, the whole issue of Brexit is going to make the EU a very interesting one.
That's beautiful. That is beautiful on the hour.
Right.
This is like the first time this is actually like the first time I'm looking at it.
Gee, it looks a lot like gold.
Yeah,
look at that.
A lot like gold. Also, let's zoom in. Let's focus. See all these late buys?
They
all these late buyers. Yes, they are sitting positive, and I'm more than sure the market will open up, gap upward, and then continue downward. Why? Because it's simply set up with this reversal pattern. Kind of like a gravestone. It kind of even gave you one right here. It gave you 3 of them, actually, on top of wick. They've trapped the longs. They've got what they wanted. Let's see where the 8 moving average is.
The only way that this continues to go up is literally by another good news of economics that's strong enough to push it past this point of resistance that it's at. And the thing about this pair is that during Asia session, Euro USD does not affect gold. It is during the London session that Euro USD affects gold. So for all you gold holders over the weekend, there's a good chance that you guys don't need to panic. If anything, there's maybe about a drawdown from 1244 to maybe 1241 or 1240, but you guys don't have to panic that much because Asia will not be concentrating on the euro. Asia will be concentrating instead on AUD and JPY.
Hey, go ahead and go over what you were explaining in the chat.
Oh, okie dokie. I guess I go ahead and switch you out while you do your thing.
Yeah, that's fine. No. Yeah, go ahead.
Okie dokie. So here we are. Can y'all see my screen?
Yep.
Can you see my screen now?
Yeah, most definitely.
Okie dokie.
Can't see it
Hold on a second. I gotta move real quick. Okay, so clearly we have different styles of charting. That does not mean that we do not skin the same animal. We actually do. The only difference is methodology. Now, I showed y'all in the group pictures of what this looked like and what I predicted was going to happen. Using this is called price action prediction. It's actually very easy to use once you understand how a price bounces up and down between the zones. So, one thing you notice one thing you noticed in the last chart that we looked at, even though it's on a giant time frame, it's pretty simple. The price only has to move up and it has to move down. But the way it does that is hardly ever a straight rocket. It tends to go in between these arbitrary zones that everyone has drawn up. That is how the price is controlled without the world panicking, seriously. Because, like I said in the group, if it was up to normal people, the price would just go straight down and then it would just go straight up. Who knows what anything would be worth at any point of the day. So, here's gold. This chart has been worked on ever since I started trading gold, and it has never stopped changing. You guys should always keep a consistent chart. You need to have one chart for shorter time frames and one chart for the longer time frames. Your longer time frames should always be consistent. Don't ever stop with a longer time frame because you will lose focus of the zones that are forming. All of these trend lines that are drawn here were added on as the price went. This makes it a hell of a lot easier to predict the price movement. I was told to keep chart markups for 1 week. That's fine. I honestly prefer to keep a chart markup for about 2 weeks, especially on a pair like gold. Now, let's look in here. Some people are wondering, why are there so many zones? One thing that I learned when trading gold is that a lot of people get ambushed by random zones that don't make sense. They will think, oh my God, this thing is about to drop, and then all of a sudden it'll randomly spike up for some reason. And by logic, most people have been like, well, at this point, it should have already dropped down to here. That's because somewhere out there, some giant bank took this point and already did some complex trigonometry to figure out that it's going to be about here where the price bounces up. All of these arbitrary points back here, you have to keep those in mind. This is why the higher time frames are incredibly important. And a lot of people miss this. A lot of newer traders in gold, and even some experienced traders I noticed, were incredibly confused by the amount of bouncing up and down that was done here. You know, a lot of logic was that, oh, well, it should bounce around here and then go back up. And then there was a lot of logic that, well, once it hit here, it should have just rocketed straight up. But little did they know that people with more money than, crap, I moved that line. People with more money than them have drawn up so many of these zones. They use the downtrend to make one leg of zones, and then they use that to intersect with these zones back here. Yes, each of these little points count, and I know that seems ridiculous, but then again, that is how people trade gold. Now, using this in mind, you can zoom in slightly and kind of help predict with price action where the price is going to go. As we see here, there's always different points of support and resistance throughout the things. You have to always mark these because between the trend lines and the zones, that is how you predict price action. Now, wow, looking at this zoomed out, this looks like crazy man stuff. Jeez. Okay, so as we see here, one of the trend lines that we drew from back here conveniently matches up with this point at around 1218. And this was a point that a lot of people were confused as to what to do. How do we play this, right? Another point that was confusing for a lot of people was about 1214. This was a part where a lot of people that I personally watched lose money over for no reason. And that was because everyone assumed that this was like it would go up, down, up, down, up, down, and then it would bounce down, and then it would rocket up. What they didn't realize is that using this trend line from way back on the left that we drew from here, that created an arbitrary resistance point that a lot of people missed. And then there was another one from way back there that created another resistance point. So this is a double resistance point that a lot of people were not prepared for. So we had a lot of buys that were trapped here at the top from people expecting this to break through, and then it confused the hell out of them as to why this went down. These are nasty tricks that bigger money and Asians, I'm being serious, that the Asian players, they use to trap you guys into thinking that, oh, well, this is going to go up. It's got to go up now. It's already following this trend up, and then boom, all of a sudden it went down. And I know a lot of people who were frustrated by this candle in particular right here. They were not prepared because there were so many zones intersecting this point that it created a hell of a resistance enough for this to go down. This looks complicated, but it really is not, because it allows you on the finer points to see exactly where points of bouncing are going to happen. This is where four trend lines happen to converge, right? This is where you would put a buy, and then it would bounce up, right? Then it hit this trend line. Then that's from that point you would go, okay, this is a sell because it hit this trend line. Then in case you weren't for sure, you could also put a buy stop at about right here in case it rocketed up. Then the people that sell will push it down, and then it, boom, hit another one, and it bounced up and down. But notice, just like in the other chart, you have 1, 2, then you have this, oh my God, then you have the final breakout down. That's because it hovered around this strong point long enough for several hours that it was worth a sell down. This is how most traders think right here. This is usually how resistance breakouts happen. If anything ever hovers around a major trend line point like this, and it continues to do that for more than, like, I don't know, 14 hours or so, it's going to drop. This is where either the brave people begin to short at the highest wick possible, or the people who want to play it safer simply use a sell stop beneath this trend zone and then watch it fall. Now, zooming in, everything that we went over here is the exact same on the minute chart. I know a lot of you cats keep asking me, how do you do this on the minute chart? Like, how do you read the minute chart? Like, how all of this chaos right here, how do you even read that? And it's actually a lot easier than you think. The main key of it is you don't look at the minute chart like this. I gotta go. Crap. Hold on. Let me switch over real quick. How do I...
What's up, bro?